What is happening in the world of tech, finance, and culture right now? The news cycle is moving at lightning speed, and if you blink, you might miss the biggest stories shaping our future. Welcome back to the Kanye Scope, your ultimate source for the pulse of innovation and the buzz of the mainstream. We're diving headfirst into a whirlwind of updates that you absolutely cannot afford to miss. Get ready for a rapid-fire rundown that's packed with insights, surprises, and the kind of deep dives that keep you ahead of the curve. From the volatile world of digital assets to the high-stakes arena of economic policy, we've got it all covered. Buckle up, because this is where the real story unfolds, and you're getting it first, straight from the Kanye Scope. Let's get into it. First up, we're talking about a massive crypto event that has shaken the digital asset world. A new token linked to a global music icon has seen an explosive launch, followed by a dramatic crash, leaving thousands of traders facing significant losses. We're breaking down the numbers, the fallout, and what this means for the future of celebrity-backed digital currencies. Next, we're shifting gears to the intersection of cryptocurrency and high-level government policy. The potential reshuffling of leadership at a major central bank could have profound implications for the financial markets, especially for emerging sectors like digital assets. We're exploring the candidates, their stances on crypto, and why this decision is being closely watched by investors worldwide. Could a new era of regulatory clarity or even acceptance be on the horizon? Then, we're diving into the investment strategies of one of the most influential fund managers in the game. This powerhouse firm has been making significant, aggressive moves in the crypto-related stock market, signaling a strong conviction in the sector's long-term potential. We're dissecting their latest portfolio additions, the underlying assets, and what this massive investment could mean for the broader market sentiment. Are they betting on a crypto bull run? And finally, we're circling back to the fallout from that high-profile token launch, revealing how a single event can expose the fragile core of crypto hype. We'll uncover the mechanics behind the crash, the alleged insider activity, and the broader implications for transparency and accountability in the digital asset space. It's a cautionary tale that's essential viewing for anyone involved in the market. Stick around for all the details, and don't forget to like, subscribe, and hit that notification bell so you never miss an update from the Kanye Scope. Digital gold rush turns to dust. The world of cryptocurrency has once again witnessed a spectacular rise and an even more dramatic fall, this time centered around a token associated with global music superstar Kanye West. Dubbed the YZY meme coin, launched on the Solana blockchain, it ignited a frenzy with a staggering 1,400% surge in its first hour. However, this initial euphoria was short-lived, as the token quickly plummeted by over 80%, leaving a trail of financial devastation for a vast number of its traders. Reports indicate that out of approximately 70,200 individuals who engaged with the YZY token, a sobering figure of over 51,800 have incurred losses, collectively amounting to a staggering $74 million. This incident serves as a stark, recurring reminder of the inherent risks in the celebrity-endorsed token market, often characterized by a pump-and-dump cycle that preys on retail investors eager for quick gains. The aftermath reveals a harsh reality. While 11 fortunate wallets managed to pocket over $1 million each, and another 99 secured more than $100,000, the overwhelming majority were left holding the bag. 3 unlucky traders even faced individual losses exceeding $1 million, underscoring the extreme volatility and unequal distribution of outcomes. The token is now trading significantly below its peak, with a drastically reduced holder base, painting a grim picture of its short-lived hype. Even notable figures like former kickboxer Andrew Tate were not immune, reportedly suffering a $700,000 loss from a leveraged short position on the token, demonstrating that speculative bets on meme coins can backfire spectacularly for anyone involved. The blockchain analytics firm Bubble Maps identified potential insider activity, pointing to wallets that profited immediately, a pattern often seen in such launches. This comes as Hayden Davies, a figure previously linked to the Libra token scandal, was identified in relation to early YZY trades. The broader context shows that such celebrity-backed tokens on Solana, despite driving initial interest, struggle to maintain value, with many seeing significant drops post-launch. The tokenomics, with a substantial portion allocated to an LLC and limited public float, coupled with a liquidity pool designed for rapid price drops, further fueled concerns about the project's structure and fairness. The legal terms of the YZY money ecosystem also include class action waivers, raising questions about accountability and recourse for investors. The rapid collapse of YZY, despite Solana's technical improvements, highlights the ongoing challenge in the crypto space to balance fervent hype with sustainable utility and transparency, leaving many questioning the true value proposition beyond the celebrity association. This volatile market event raises serious questions about the integrity of celebrity-driven crypto projects. But what happens when the spotlight shifts from digital tokens to the very institutions that govern our economy? We're heading into a discussion about who might be calling the shots at the Federal Reserve and what that could mean for the future of finance. Policy power play, Fed chair contenders and crypto's future. As the cryptocurrency market navigates its inherent volatility, a crucial development is unfolding within the U.S. economic policy landscape that could significantly influence its trajectory. The Trump administration is reportedly considering a shortlist of at least 11 candidates to succeed Jerome Powell as the Federal Reserve Chair when his term concludes in May. What makes this selection particularly noteworthy for the crypto community is the inclusion of several individuals who have previously expressed constructive views on digital assets. This potential shift in leadership at the helm of the nation's central bank carries substantial weight, as the Federal Reserve's monetary policy decisions, particularly regarding interest rates, have a direct and profound impact on speculative markets, including cryptocurrency. Lower interest rates typically inject liquidity, often boosting asset prices, while higher rates can drain liquidity and dampen market enthusiasm. Therefore, the prospect of a Fed chair who is at least open to, or even supportive of, digital assets could signal a more favorable regulatory environment or a less restrictive monetary policy stance towards the sector. Among the names generating significant interest is Rick Rieder, BlackRock's chief investment officer for global fixed income. Rieder's previous comments acknowledging Bitcoin as a potential component of asset allocation frameworks suggest a level of mainstream acceptance for digital currencies that was almost unthinkable just a few years ago. His inclusion on such a shortlist, especially given his prominent role in traditional finance, indicates that digital assets are increasingly being considered within the broader financial discourse at the highest levels. Other candidates, such as former Fed officials James Bullard and Larry Lindsey, along with current Fed members like Philip Jefferson and Chris Waller, also bring diverse perspectives, some of which have been interpreted as more amenable to technological innovation in finance. The market is keenly observing these developments, as the appointment of a Fed chair perceived as crypto-friendly could foster greater institutional adoption, potentially stabilize regulatory approaches, and contribute to a more predictable market environment. Conversely, a more hawkish stance could exacerbate the challenges faced by the crypto sector, particularly during periods of economic tightening. The selection process, which involves extensive vetting, will undoubtedly be scrutinized for any signals regarding the future relationship between established financial institutions and the burgeoning world of digital assets. This high-stakes decision is poised to shape not only U.S. monetary policy, but also the global perception and integration of cryptocurrencies into the mainstream financial system, making it a critical watchpoint for investors and policymakers alike. While the corridors of power deliberate on monetary policy, another influential player in the investment world is making bold, strategic moves in the crypto-adjacent market. We're about to uncover which major investment firm is doubling down on digital assets, signaling a strong vote of confidence amidst market uncertainty. Cathie Wood's crypto conviction, ARK Invest's aggressive stake building. In a bold display of confidence in the burgeoning digital asset sector, prominent investment management firm ARK Invest, led by Cathie Wood, has significantly increased its stake in Bitmine Immersion Technologies, BMNR, a company with substantial exposure to Ethereum. This strategic accumulation, spread across 3 of ARK's exchange-traded funds, underscores a growing conviction in the long-term potential of cryptocurrencies and the companies enabling their infrastructure. The latest purchase alone amounts to $15.6 million, bringing ARK's total investment in BitMine to over $300 million. To put this into perspective, this holding is nearly half the size of ARK's position in Coinbase, one of the largest cryptocurrency exchanges, which currently stands around $676 million. The aggressive buying spree, which began on July 21 with an initial $174 million investment and continued with subsequent purchases, highlights Wood's unwavering belief in the underlying value of Ether, ETH, the native cryptocurrency of the Ethereum blockchain. BitMine's significant Ether holdings essentially make ARK's investment a strategic backdoor into the performance of Ethereum itself. This move is particularly noteworthy given the recent volatility in the broader crypto market. ARK Invest has also been actively diversifying its crypto-related portfolio, recently acquiring $21.2 million worth of shares in Bullish and $16.2 million in Robinhood markets. Furthermore, the firm recently re-entered the block, formerly Square market, with a $19.2 million investment after a period of selling. As of this week, ARK's holdings in Robinhood alone are valued at approximately $543 million. While these substantial investments signal strong bullish sentiment, they also come with inherent risks. BitMine shares have experienced short-term price fluctuations, dropping by 8% on Wednesday and an additional 2.22% after hours. However, the long-term performance of BitMine remains impressive, with the stock up nearly 490% year-to-date. The company's financial health also appears robust, with quarterly revenue showing a 67.5% year-over-year increase to $2.05 million and profit margins growing by 43%. These fundamental metrics, combined with the strategic exposure to Ethereum, are likely key drivers behind Cathie Wood's aggressive accumulation strategy. This sustained investment activity from a high-profile fund manager like ARK Invest serves as a significant signal to the market, potentially influencing investor sentiment and validating the growing institutional interest in digital assets. It suggests that, despite short-term market noise, significant players in traditional finance are actively seeking and increasing their exposure to the crypto economy. ARK Invest's significant bets are certainly turning heads in the financial world. But what happens when the hype surrounding a major celebrity token goes from 0 to 60 and then crashes just as fast, exposing the raw underbelly of the digital asset market? We're going to break down the anatomy of a crypto meltdown that's leaving thousands of traders in the red. Solana's YZY token meltdown, a cautionary tale of hype over substance. The cryptocurrency landscape, particularly on the Solana blockchain, has been rocked by the dramatic collapse of the YZY token, launched by global music icon Ye, formerly known as Kanye West. In a rapid descent from its peak, the token shed over 80% of its value within a single week, resulting in an estimated $75 million loss for retail traders. This stark downturn followed an initial surge that propelled its market capitalization to a reported $3 billion shortly after its August 20th launch. The project, branded as YZY Money, proposed an ambitious decentralized financial ecosystem encompassing a payment processor and a branded card. But its execution has been marred by significant transparency issues and alleged insider trading. Adding to the chaos, Ye himself claimed on August 26 that his Instagram account had been compromised and used to promote a fraudulent version of the token, which briefly achieved a $7 million market cap before its inevitable crash. He subsequently provided the correct contract address for the official token, ending in YEZY, and directed followers to the official YZYMNY account. This incident, however, only amplified investor confusion and eroded confidence in the project's legitimacy. The Counterfeit Tokens Association with PumpFun, a platform notorious for facilitating highly speculative meme coins, further fueled these concerns. On-chain data analysis by Bubble Maps revealed that the token's distribution closely followed its stated tokenomics: 70% allocated to YZY Investments LLC, 20% to the public, and 10% for liquidity. While the deployment of multiple contract addresses was intended to mitigate bot interference and offer fairer access to smaller traders, it did little to prevent the subsequent price collapse. The structure of the liquidity pool, seeded with 30 million YZY tokens, was designed in a manner that allowed for precipitous price declines once certain trading thresholds were crossed. This rapid implosion mirrors the fate of other celebrity-backed tokens, such as Hawk and Trump, which have also experienced severe price drops, highlighting the inherent volatility and speculative nature of these ventures. Concerns about potential insider trading were amplified by Bubble Map's identification of Hayden Davis, a figure linked to the Libra token scandal, controlling wallets involved in significant YZY transactions, raising questions about early market manipulation. Furthermore, the YZY Money project's terms of service include a class action waiver and jurisdiction restrictions, which critics argue limit accountability and recourse for token holders in case of project failure or misconduct. Despite these controversies, the YZY launch has inadvertently drawn attention to Solana's capabilities as a platform for large-scale token distributions, even as the broader market grapples with the project's fallout. The YZY token's trajectory serves as a potent case study on the perils of hype-driven markets, underscoring the critical need for transparency, robust tokenomics, and genuine utility to sustain long-term value in the rapidly evolving cryptocurrency space. This dramatic crypto crash is a stark reminder of the risks involved in speculative digital assets. But what happens when the market's attention turns to the potential leadership of a major global financial institution? We're diving into the names being considered to lead the Federal Reserve and what their decisions could mean for the future of finance. That's a wrap on today's explosive updates. We saw Kanye West's YZY token implode, costing traders millions. We looked at potential Fed chair candidates who could shape crypto policy. We highlighted Cathie Wood's massive crypto stock buys, showing major firm conviction. And we broke down how the YZY meltdown exposed the fragile core of crypto hype. Don't miss out on any future developments. Hit that subscribe button, ring the notification bell, drop a comment with your thoughts, and follow us on all social platforms for more. See you next time on the Kanye Scope.